Welcome to day 3 of the Golden Algo Nuggets. Why am I doing this series? Well, that has to do with the fact that I am an entrepreneur now since 2005. So I have something to celebrate, and that has been the 20 years of entrepreneurship. And I want to celebrate that by giving you 10 golden nuggets. So explanations about some funny stuff in the algorithm you can use to create your own models around, to create your own edge in the market. And besides that, I'm also giving away 20% discount on all my plans for my Discord community and my ICT Simplified course. So if you would like to receive my weekly outlooks, my daily outlooks, get notified of my trade setups, my personal trade setups, and want to ask me all kinds of questions you like, then of course join the Discord with the link in the description. You get a 20% discount with the code 20. So today, the third golden nugget I want to talk about is SMT, but not in the way you might already know it. All of us, like almost all of us, know that ICT is all about the SMT divergence, or at least that is the bigger SMT explanation we learn. But I've come to notice that we can use SMT in a much bigger way than that. We can use it much more advanced. Because what is SMT divergence? It is a crack in correlation. So that can mean anything. So whenever the charts are not exactly doing the same thing, it can hint a possible reversal play. So today I want to dive into SMT divergence, but take a look at it from the T perspective. What if it's smart money timing? So let's dive into the charts. Super simple example today. What are we looking at? We're looking at the indices. We have NASDAQ on the left, we have ES in the middle, and we have the Dow. This is a 15-minute chart, doesn't even matter, but this way I can look at it best. I can see the results the best. So today I want to show you a crack in correlation. And a lot of the times what people are looking for is SMT divergence. But what do we see over here? There is no divergence. They all made a low. Well, technically speaking, I could say that here is a tiny divergence on the lows, but that is not the one I want to talk about today. What I want to talk about today is a time-based divergence, so to say. This green line is the New York opening price. So 9:30, when the opening bell is there, that is where it opens. And if you extend that price level to the right, you get the green line. So on NASDAQ, the green line, on ES, the green line, and on the Dow, the green line. And what do you see? If I draw out from the open to the next low that's created, a line from the open to the low, and from the open to the low. We can see that NQ never tapped the opening price again, while ES and the Dow did. This is SMT. So you might have never heard of this one. I believe this is more advanced SMT, but SMT is nothing other than a crack in correlation. And if you draw it out on time-based levels, in this case, in New York Open, you get some magical stuff. So this was an example of last Friday. And I have another example right here. It doesn't happen every day, of course, just like everything doesn't happen like every day. But here you can see the same thing on Monday, March 17th. So we see opening price, the green line, and we see a low formed after that, trading below that opening price. Then on ES, we have the opening price. We have a low not breaking, not tagging that opening price. And then we have the Dow also doing nothing. This is the same low, There's even another cracking correlation here, because this one is also an SMT, and also like that. Yes, close. So there's a double SMT here, but this is more like the price level right there. But the most important thing is that there's SMT on the opening price. So kind of a golden nugget, right? This one is one of my favorites personally. So start hunting those nuggets in the charts to get better and to create an edge and create a model around it. All right, gang, short one. I think it's a valuable one. If you want to join the community, my community and course, you can join with the code 20. You'll find the link in the description. I'm looking forward to see you there. So have a great day. Bye-bye. See you soon.